This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Caution in the markets as investors eye next week's BOJ and Fed meetings. US factory price data also in focus later today. We'll bring you top analysis. US Secretary of State Antony Blinken calls on Israel to dramatically increase food aid getting into Gaza. This as the Knesset passes a war budget, taking Israeli spending to an all-time high. Plus, the clock ticks for TikTok. The fate of the video app is now in the hands of the US Senate after the House votes to force ByteDance to sell it or face a ban. It's just gone 8 a.m. across the Emirates. I'm Lizzie Burden in Dubai. Good morning. Welcome to Thursday. And as I say, we are now looking towards the PPI and retail sales data out of the US. But really, the focus is on that BOJ meeting and the Fed meeting as well. In the meantime, you've got markets trading sideways. The MSCI Pacific Index is pretty flat, as are European futures, and so too are US futures after a lower close yesterday. If we flip over to the cross-asset picture, you've got Treasury yields steady after a sell-off yesterday. Do watch out if they drift higher, if PPI surprises to the upside, because PPI, of course, is an important informer of the Fed's preferred inflation gauge, PCE. You've got the dollar flat at the moment. The BOJ, of course, will take centre stage for FX market of the 60% roughly of central banks making monetary policy decisions in the week from tomorrow. You've got Brent trading at $84 a barrel on the back of that Russian refinery attack and the US inventory drawdown. And finally, copper there has been at an 11-month high on reports that Chinese smelters are weighing capacity cuts. $8,898 is where we trade on the London Metal Exchange. But let's zoom in now on Asia markets. Avril Hong's on standby for us in our Singapore studio. Avril, what's happening where you are?
Lots happening, or maybe not, given how I think investors are pulling back a bit in anticipation of what we're going to get from the Fed and the BOJ next week. There's a lot of noise surrounding the Japanese central bank. More recently, we're hearing how the BOJ officials could be considering scrapping ETF purchases if their inflation targets are met. And then yesterday, we got those comments from the BOJ governor coming in dovish, saying they want to see more comprehensive data. So amid all that chat, I think investors are preferring to sit on the sidelines a little. The yen gains are capped from the governor comments, and I think the Nikkei is pretty muted, even though we're seeing some of the copper-related stocks helping to support the indices, including on the topics. Now, bonds, that's also where we're seeing the pressure as investors wait for next week. We saw a 20-year auction seeing very weak demand. Let's flip the board because tech is also bearing the brunt of the risk off in China, and the Hang Seng Tech is declining today after it entered a bull market earlier in the week. So that's capping the gains and dragging actually now the Hang Seng CSI 300, and we're also seeing the similar moves there from the copper-related stocks. As I say, it's risk off today, Lizzie.
Thanks, Avril. And we are going to dig into the Hon Hai and Foxconn earnings shortly with Robert Lee. So I'm glad you touched on tech for us there. Now, expectations for the yen to outperform its peers this year have all but evaporated, with strategists now forecasting the currency to end 2024 within a few percent of where it started. Let's bring in Mo Seong Sim, Bank of Singapore currency strategist, for more on this. But first, we just need to acknowledge some of the data that we're going to get out of the US later, just while we connect to Mo. We've got PPI coming, which, as I say, is a really important piece of data because it informs the Fed's preferred inflation gauge, PCE. We also have retail sales data. If we also think about the policy decisions that we're going to get, you've got about 60% of the world's central banks making monetary policy decisions in the week from tomorrow. So this is going to be a very important week. We're going to speak more to Mo, digging in to all of that. And later in the programme, we're also going to get an update on the Middle East geopolitical situation. We're going to dig into those Foxconn earnings on tech. We're also going to look ahead to the Saudi inflation data that we get at 10 a.m. UAE time with our Bloomberg economics team. And we will talk about Saudi sports and how investors here in the Middle East are pouring their money into that. But let's get to Mo Seong Sim, Bank of Singapore currency strategist, for more on our markets conversation now. Great to have you on the programme, Mo. Let's just start off then with the central bank meetings that we are expecting to get in the next week. What's going to be more important for currency markets, the Bank of Japan meeting or the Fed's dot plot?
Well, I'll say both are equally important. I think there is anticipation of Bank of Japan. Well, I think on balance, I think probably the Fed matters a lot more to the broader market than the Bank of Japan, where Bank of Japan matters more for the yen itself, but the Fed matters more for the broader dollar view.
I like it. And as we look ahead to those US PPI and retail sales data, Mo, we've already seen stronger than forecast CPI this week again. Does it mean that the Fed cuts fewer times this year, not later?
Well, I think there is the concern here that the second consecutive hotter than expected print for the US CPI could make the Fed a bit more squirmish at the margin. Although I think the market is still very comfortable with the idea that the Fed is still poised to cut. But the question here is whether dot plots will continue to show 75 basis point of rate cut, which is currently the case, or fewer. So I think that's going to be one of the questions that needs to be answered at next week's FOMC meeting.
And of course, we know that it's going to be a Trump-Biden presidential race. What would a Trump presidency mean for the greenback?
Well, I think a lot of uncertainty in terms of the policies that we have heard from Trump so far. I mean, in terms of the trade policies that could potentially, with a tariff, could potentially result in a spurt of dollar strength against major trading partners. Currencies are major trading partners like the euro, the Chinese yuan. Also, in terms of foreign policy, what if Trump pulls U.S. out of NATO? That could result in dollar strength against the euro, given the security concerns over Europe itself. So I think there's going to be a lot of volatility going into the U.S. elections in March, especially 3 to 4 months in November, especially 3 to 4 months before the actual election itself.
OK, and I'm also keeping an eye on gold, Mo. Is its strength totally a Fed story?
Well, I think gold is a bit of a curiosity at the moment. It's a bit of mysterious mystery in terms of the rally that we have seen so far, which cannot be fully explained by the changes in Fed rate expectations. I mean, on the whole, we have seen a hawkish repricing of the Fed rate expectations since the beginning of the year, but gold has charged up, has surged. And I think part of the story here is that there's been structural shifts in gold demand to explain the recent gold rally. One of the structural shifts that we have known for a while is the EM central bank buying of gold as a result of U.S. weaponizing the U.S. dollar through sanctions on Russia for its invasion of Ukraine. The second structural shift, which is a possibility here, is that the retail buying in China may have picked up as a result of poor returns in stock market and in property in recent years. So that may have driven up gold. I mean, overall, we have been bullish and remain so on gold. But I think a period of consolidation will be healthy for the market. But I think in terms of the direction, there's probably still more upside for gold over the course of this year.
And Mo, if you can indulge me a moment, I see in your notes you've been writing about the UK economy. The labour market's cooling. We learned yesterday the economy's growing. The polls suggest political stability may be on the way. Is it time to get bullish on Britain?
Well, I think we are on the whole turning more neutral on the sterling. We have been cautious earlier on. We are turned more neutral on the sterling right now, given that that the Bank of England has been telling us that they are in no hurry to ease, even though the labor market has been cooling. And that's because I think, broadly speaking, inflation has remained sticky in the UK. And we still see the Bank of England easing at a slow pace compared to the Fed and the ECB, where we expect the Bank of England to only start easing in August, relative to our expectations of ECB and Fed starting to cut rates in June. And on the politics side, I think politics, as long as the polls are showing that Labour has a majority, and as long as Labour maintains the lead, then post-election, a period of strong Labour majority could lead to a period of political stability, and that would be a positive for the pound. So we might be at a turning point for the UK. The bearish case is well known for the UK, and we might be at a turning point of this bearish consensus.
Maybe chance to be optimistic. All right, I'll take that. Mosim, Bank of Singapore currency strategist, we thank you for being on the programme. As we note that indeed yesterday GDP figures showed the UK is no longer in negative growth. I heard the sigh of relief from Downing Street. Of course, those headlines about a technical recession, no help for Rishi Sunak, the Prime Minister. But off the back, we've seen Bloomberg Economics upgrading its forecast for UK growth this year and pushing back when it sees the Bank of England cutting rates to June. So a double-edged sword for markets. Still ahead, Standard Chartered explains why they see the Gulf as a global growth bright spot. MENA economist Carla Slim will be with us to share their market strategy later in the hour. But first, US Secretary of State Antony Blinken is calling on Israel to dramatically increase the amount of food aid getting into Gaza. We'll bring you an update on the Middle East conflict next. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Lizzie Burden in Dubai. Now, to the latest in geopolitics, US Secretary of State Antony Blinken has called on Israel to dramatically increase the amount of food aid getting into Gaza. America's top diplomat says supplies allowed in since the outbreak of the Israel-Hamas war remain insufficient.
The bottom line is we need to see, as we've described it, we need to see flooding the zone when it comes to humanitarian assistance for Gaza.
Joining me now for more is Bloomberg's Stuart Livingston-Wallace. Stuart, how quickly is this aid going to arrive in Gaza? And what are the implications for the US military presence that's in the region?
Yeah, I mean, the short answer on the first element of that is very slowly. And that, again, is what we discussed yesterday. The logistics here are very difficult. But I think there's some really interesting implications as well for the US presence here. So they've been desperately trying to get themselves out of the region. And this, in effect, this idea to have a temporary port in Gaza effectively drags them right back in, because the way it's going to be structured is a sort of a floating dock. That's going to need military protection, and that's going to have to be on quite a large scale because it's right on the edge of a hot war. So when you're in that sort of zone, you have to put in the troops in order to protect the aid coming in. And that sort of completely reverses, I think, the trends that you've seen with the US military over the last several years.
Yeah, because they're already fending off Somali pirates, Houthi rebels, and now they open another line. How surprising was it as well that BP and ADNOC suspended the mega deal that was in the works? What else could be the implications for similar such deals in the region?
Yeah, I mean, I think what it speaks to, I mean, again, not very surprising. When it landed, I mean, I think this is something we were anticipating for some time. If anything, the surprise was how long it took them to kind of announce it. But it's completely understandable, you know, thinking from a sort of a public perception of trying to do deals right now in this region. You know, that is going to be a big problem. What is slightly promising is that they've suspended it rather than scrapped it altogether. And again, longer term, clearly we'll see deals coming back. But right now, we should anticipate pretty much a freeze across deals, anything to do with this region right now.
And meanwhile, I mentioned Israel's budget, given final approval by the parliament yesterday. The GDP per capita doubled in the last 15 years alone. To what extent does this record war budget signal the end of that astounding growth?
Yeah, and it really has. It's been a remarkable economic growth story in Israel. When you think about where it came from, where it ended up, the boom in technology, the boom in just about everything. They have an incredible track record in terms of the wealth creation.
Tech.
Exactly. But what this has done is it sort of brought it to some extent to a screeching halt. Now, some of that is the basic practicalities. They took hundreds of thousands of people out of the population, put them into the army, because that's what was needed for Gaza. So that brought everything to a halt. And yes, some of the reservists have been called back now. But again, like we discussed, with BP and ADNOC and the gas deal, there is, I think, going to be a reluctance to invest heavily in Israel for the foreseeable future. And that's pretty much going to put a dampener on everything.
OK, Stuart Livingston-Wallace, thank you for that update on the situation in Gaza and the implications for business as well. Now, Hon Hai is on track to report its second straight quarter of strong profit growth. That's with demand for AI hardware helping to offset weakness in iPhone and consumer electronics sales. Joining me now is Robert Lee from Bloomberg Intelligence, who can tell us more. Robert, what are we expecting from Hon Hai's earnings? Something of a barometer for China tech?
Yes, absolutely. Barometer for China tech, but more importantly, I think a barometer for Apple, given its ongoing challenges in the China market. I think the year-end numbers for 2023 as a whole are likely to be weak, but that's well known and expected because Hon Hai, aside from its Apple exposure, is quite a broadly spread business with exposure to mainstream smartphones and also the PC market. So last year we saw a lot of destocking in the business, which negatively impacted them. But as I said, I think that's quite well known and well understood and arguably priced in. Looking forward, they look to have a better year across the board as we see companies rebuild their inventories, given the relative robust growth outlook out there. However, Apple is going to overhang them. Apple accounts for just over half group revenues. And I think, as was reported on several weeks ago, there was some speculation that Apple's China smartphone sales were down 24% in the first 6 weeks of the year. Now, I must stress that is speculation at this point, but also it ties in with the data that Apple's produced in recent quarters as they see ongoing weakness in the China market. So this Apple question, I think, is where investors will be focused and potentially will continue to overhang Hon Hai going forward.
And speaking of AI, Foxconn Industrial slipped 6.5% after its fourth quarter earnings missed yesterday. When are we expecting a boost from its AI server sales, Robert?
No, true. I think when you, and again, this is a subsidiary of Hon Hai. It's a very complex group, but we'll save that discussion for another day. I think the issue is mainly their mainstream server business. Again, the regular data centers that go into telecoms and networking business. Their AI-related business actually performed quite well. And again, across the board, as a general comment, that's something we continue to see, and that's a trend, that's a multi-quarter, multi-year trend. The issue is for businesses like Foxconn, whilst their AI business may be doing well, is the question marks in a mainstream business, and for Hon Hai in particular, the question marks surrounding Apple, as I say, when Apple accounts for just over half group revenues.
And Robert, I just want to ask you while I've got you, is there a wider read across from ByteDance's US TikTok woes to the China tech sector?
Yes and no, in brief. ByteDance's problems or challenges obviously relate to their US TikTok business, so whether they will be forced to sell that off or whether it gets shut down. Now, the relevance to China tech is that ByteDance is one of the major internet giants here, even though it's a private company. It's a major competitor to Tencent, and so I guess there are two ways that things could play out. If they're forced to withdraw from the US market, will that make them refocus and result in an increase in competition in the China market to Tencent's, as a potential headwind for Tencent, or could it go the other way? Potentially weakened ByteDance that has lost, exposure to the profits and cash flows it generates from the US. Could that actually wound them below the waterline and result? So I think, it's too early to call it either way, but that's a key question people need to focus on.
Well, thanks for pointing it out. Robert Lee from Bloomberg Intelligence, we thank you. We've got plenty more ahead. Stay with us. This is Bloomberg.
I think the experience from last decades shows how governance is a key issue when it comes to economic growth and prospects of economic prosperity. So I think governance issues will be very high up on the agenda everywhere, because the connection between good governance and economic growth is very clear. And if you have situations like we have seen in the Sahel region for a number of countries, for instance, that can be devastating for economic development and for investments.
What does that mean then for the investment strategy, at least in the short term?
So for us, it is very important to focus on viable long-term investments that have a chance to give a boost to economic growth. So when it comes to the political guidance, we follow the European Commission, of course. But when it comes to the actual projects, we use our expertise that we have in Luxembourg to assess each and every project. So renewable energy is for us key, energy transmission. In Rwanda, we are working a lot on health issues. We have a biomedical center that we are financing now that will be part of the ecosystem of health and life science in Rwanda. We do infrastructure, part of the global gateway strategy of the European Union. And I think it is very important for us to stay being very active on the continent and have a true partnership with the countries that we cooperate with.
Does the current macro environment right now lend itself to increased funding across the continent from the EIB, or is this sort of the announcements that we'll get as far as the continent goes with the EIB?
It's a truly challenging situation macroeconomically, and has been globally, of course, but I think Africa has been specifically hit by a couple of the shocks that we have experienced in recent years. First, of course, COVID meant a large drop in GDP for many African countries. Then came the brutal Russian invasion of Ukraine that caused both inflationary and shocks to the agricultural sector. So this has been a very challenging situation, and many African countries went into these two shocks with relatively elevated debt levels. So I think multilateral development banks has a specific responsibility here to look for viable projects that can still be financed, because many of the countries on the continent has challenges on the capital markets to finance themselves on reasonable terms.
This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Caution in the markets as investors eye next week's BOJ and Fed meetings. US factory price data also in focus later today. We'll bring you top analysis. US Secretary of State Antony Blinken calls on Israel to dramatically increase food aid getting into Gaza. This as the Knesset passes a war budget taking Israel spending to an all-time high. Plus, the clock ticks for TikTok. The fate of the video app is now in the hands of the US Senate after the House votes to force ByteDance, the parent company, to sell it or face a ban. It's just gone 8:30 a.m. across the Emirates. I'm Lizzie Verdon in Dubai. Good morning. Welcome to Thursday. And you're looking at markets trading sideways as we look ahead to the PPI and retail sales data out of the US later. The focus, as I say, very much on the Bank of Japan and Fed meetings that are coming amid the raft of central bank decisions over the next several days. We've got about 60% of central banks around the world making their monetary policy decisions from the week from tomorrow. But if you look at the equity picture, the MSCI Asia Pacific Index is weaker 0.1%, and futures pointing to a lower opening in Europe, but a touch higher stateside after a close that was lower yesterday for the S&P. If we flip over to the cross-asset picture, Treasury yields pretty steady now after a sell-off yesterday. Do watch out, however, if they drift a bit higher if PPI surprises to the upside. PPI, of course, an important part of feeding into the Fed's preferred inflation gauge, PCE. You've got the dollar flat currently. The BOJ, of course, is going to take centre stage for FX markets of the central banks making those decisions. Brent trades at $84 a barrel on the back of the Russian refinery attack and the US inventory drawdown. And finally, copper has been at an 11-month high. $8,894 is where we trade on reports that Chinese smelters are weighing those capacity cuts. But we'll get more into that later in the programme. For now, let's check in on how Asia markets are faring. We've got Avril Hong to bring us the latest. Avril.
Yeah, Lizzie, let's talk tech, because that seems to be bearing the brunt of the selling ahead of the Fed and the BOJ. But there's also earnings risk. Hon Hai reports results later today. And of course, this is the main iPhone maker for Apple, so it's very closely watched. It's expected to show how AI demand is helping to offset weak iPhone sales. But ahead of that, we got its unit, Foxconn Industrial, reporting a sales miss, net income miss estimates as well. So we're seeing stocks listed in China for that unit lower. Affiliate, fellow unit of Hon Hai, Foxconn Technology, plunging by almost 9% earlier. That was the most since March 2020. Let's flip the board, because something we're also keeping an eye on in EM Asia is those India small cap stocks. They've had a phenomenal run since March last year. And amid this build-up, there have been signs that regulators are increasingly concerned about the froth, the overheating. They're telling money managers to limit purchases, and we're seeing the small cap gauge in a matter of a couple of weeks lose market cap of tens of billions of dollars. The worry here is that it spreads to the wider market. We saw the Sensex down yesterday, erasing the gains for the month. Today, both the small cap gauges and the broader indices are recovering some of those lost ground, but still it's something we're going to be keeping a really close eye on, Lizzie.
Well, thanks for doing that for us. Avril Hong in Singapore, we thank you for that preview and that update. Now, let's get back to the region here. The European Union's working on an aid package for Egypt that would provide €7.4 billion in a mix of grants and loans. This comes as the country continues to deal with the fallout from the Israel-Hamas conflict. For more, let's bring in Ziad Daoud, our Chief and Emerging Markets Economist of Bloomberg Economics. Great to have you for the first time with me on the set. Let's just talk about Egypt here. How much is the total aid to Egypt adding up to? And is it going to be enough to solve the country's woes?
This is substantial, basically, support that Egypt has received in the last few weeks. So you have the $8 billion from the European Union, you had the $8 billion deal with the IMF, and more importantly, and more substantially, is the $35 billion that Egypt is set to receive from the UAE, and actually has received the first tranche of that a couple of weeks ago. They will add up, I think, if you include also the World Bank, the EU, Japan, the UK, that could add up to about $55 billion. And that is enough to address Egypt's short-term dollar shortages, which have led to the currency weakening by 2/3 in the last 2 years. Obviously, there are bigger structural issues in the long term, but in the short term, at least the dollar shortages are going to be addressed by these funds.
Well, yeah, that money is going to be tied to a series of reforms Egypt would have to embark on. How guaranteed is it?
Well, some of them, the IMF is demanding that Egypt switches to a flexible exchange rate and stop managing the currency closely. There is the reliance on hot money that got Egypt into trouble in recent years once global interest rates have risen. But there are things that are outside the IMF and the donors' controls. For example, one of the crucial issues in Egypt is the dominant role of the army. This has prevented exports from increasing and has basically turned off international investments from going into Egypt. And it's difficult for international agencies like the IMF and the World Bank to demand a structural change in the sort of the structure of the Egyptian economy and the role of the army there.
If we can just take a look as well to Saudi Arabia, we've got inflation data coming at 10 a.m. Dubai time. What are you expecting?
Muted inflation. So inflation is below 2% in Saudi. I think that basically reflects two forces. You have housing costs that are high, but everything else is almost is very low, and that leads to a below 2% inflation. I think generally we care about inflation both as a measure of cost of living, and obviously that matters for Saudi, but also as an indicator of monetary policy. For Saudi, the second item is not relevant because they have a peg to the US dollar, and their interest rates tend to follow the US.
We'll keep an eye on that in just under 90 minutes' time. That was Ziad Daoud, our Chief Emerging Markets Economist for Bloomberg Economics. Thank you. Now, let's continue the markets conversation. We can bring in Carla Slim. She's MENA economist at Standard Chartered. Great to have you on, Carla. Let's start with Egypt. How much do you reckon, as we were just discussing, this Egyptian currency devaluation will actually affect consumer costs?
We have already seen this play out, actually, Lizzie. So when we look at the February inflation print that surprised on the upside, I think it's the first time in a while that the actual outturn in inflation turned out 10 percentage points higher than the consensus at 25%. We were at 25.9%. Inflation came out at 35.7%. So it's already impacting consumer costs. We expect to see a few more prints of higher inflation going forward, maybe 2 or 3 more inflation prints edging higher, potentially returning to the peak that we had seen last year in September of 38 to 39%. But then we expect base effects to kick in and the strengthening of the currency to come into play. And we do see inflation decelerating and a strong disinflation trend, taking inflation to 20-25% by the end of this calendar year.
OK, that's helpful. And then how much do you expect the devaluation to attract portfolio inflows, not just to Egypt, but also to the likes of Nigeria and Kenya, who've been doing similar?
I think there's a lot of money sitting on the sidelines looking for the next big reform story, whether it's in Africa or generally in EM. And Egypt has managed to deliver this long-awaited inflection point. It's delivered a positive confidence shock. Ziad was mentioning figures of about $50 billion. We would also expect this to be even higher when you account for potential forthcoming Saudi deals, using the ADQ deal as potentially a template that can be replicated. We can also potentially count portfolio inflows of, let's say, mid-single digits, $5 billion. There's a lot of sizable material dollar inflows coming into Egypt, and we've revised our dollar EGP forecast for end of year to 45 on that expectation.
And for how long do you think investors are going to need to feel confident about this FX stabilisation to put their money where their mouth is?
It's a great question, Lizzie, because so far what we've seen is an overshooting of the FX to about 50 levels. We've already started to see the currency retrace a little bit. This is a testament to the volumes. There are more volumes that are clearing in the markets. We hear reports and we see reports in the media of potentially interbank volumes increasing to $4-5 billion since last week's triple announcement. So we could potentially see things evolving quite quickly, but there are 2 risks that we caution. One is inflation that we've already talked about, that we would need to see confidently inflation resuming the disinflationary trend and real rates going into positive territory. Currently, real rates are negative 8.5%. And the second is the consistency of the FX inflows. A lot is potential, a lot is expected. We would need to see that really materializing.
OK. Speaking of risk, we were discussing geopolitical risk with Stuart Wallace earlier. In terms of that risk, do you see this tit-for-tat between Israel and Hezbollah ending in all-out war? What sort of level of risk are you pricing?
It's not our base case scenario, simply because the costs of an all-out war would be too large for both countries to bear, and the direct and indirect players as well. But the risks have never been higher, in my personal opinion. And the economic implications for Lebanon also would be quite prominent, because we had just seen Lebanon implement a few positive steps with regards to monetary policy, fiscal policy, unification of the FX rates. GDP had just bottomed out, inflation had just peaked. The PMI had just really nudged above that 50 threshold where it's in expansionary territory. So we are currently experiencing a return to recession in Lebanon, where it's now going to take an additional year for Lebanon to emerge from its long recession and back into growth, delayed by the tit-for-tat escalation. but a further war would definitely risk derailing that.
Okay, just too difficult for anyone to think about. All right, Carla Slim, MENA economist at Standard Chartered. I like that you put numbers on everything for us. Really appreciate that. Now, the countdown is on for TikTok. The US House of Representatives has passed a bill to ban the short video app used by 170 million Americans, no less, unless its Chinese owner sells it. Critics accuse the platform of being a national security threat, and the bill will now face debate in the Senate.
And that's the responsibility of Congress. That's our responsibility to guard against these kind of national security issues. That's why we acted on this. We're not talking about banning TikTok. This is up to TikTok. This is up to ByteDance. They make the decision on whether they want it to go away or whether they want to divest themselves of the ownership of this.
So that was the latest on TikTok there. And the TikTok CEO reacted to what he called the disappointing US House vote. He posted a video online, and naturally.
Hi everyone, it's Show here. Just wanted to share some thoughts with our US users about the disappointing vote in the House of Representatives. There has been a lot of misinformation, and I hope to clarify some things. First, thank you to our incredible community. You are what makes TikTok so special. Thank you for making your voices heard. Over the last few years, we have invested to keep your data safe and our platform free from outside manipulation. We have committed that we will continue to do so.
Selling the merch there. Well, plenty more ahead. Stay with us. This is Bloomberg Daybreak, Middle East and Africa. Welcome back to Bloomberg Daybreak, Middle East and Africa. I'm Lizzie Burden in Dubai. To Africa now. The South African government has terminated a deal to sell a controlling stake in its flagship airline after 3 years of negotiations with Takatso Group. We can get more now from Bloomberg's Ntando Tukwana. Ntando, what led to the breakdown of the deal?
Lizzie, it certainly has been a long process, a very complicated one. A big chunk of the reason why these talks broke down is just the fact that there were disagreements between the Department of Public Enterprises, which is responsible for SAA, as well as the Takatso Consortium, which was going to inject 3 billion rand for a 51% exchange, a 51% stake in the airline. And they did not agree on the value of the airline. The first valuation was done in 2020 when the global aviation industry had taken a knock from COVID-19, which valued the airline at 2.1 billion. And the second valuation that did happen saw its value shoot up to more than 5 billion rand. And that was during a time when the economy was progressing and there were improvements in the market conditions. And the government felt that if they continued with the deal, which was basically the 3 billion rand injection, that it would be underpaying for the sale of this airline. And that was the biggest factor that led to the breakdown of these talks.
OK, so then what's next for South African Airways?
So the airline will return to being 100% owned by the state-owned company. It must now go back and devise a corporate plan, which will basically lay out its turnaround plan. And part of it will have to include adding new routes and leasing more aircraft. They also did say that they will need to bolster the board of SAA. But all of that is going to actually need a hefty amount of cash to get it to a point where it is stabilized. And it's going to be very interesting to see how that is going to be playing out, because the government has taken a very hard stance against the funding of state-owned enterprises. So it's going to be very interesting to see how they raise those funds. They did hint at approaching financial institutions to help them out on that front.
And Tando Tukwana, excellent reporting. We thank you for coming and telling us about it. Now, Bloomberg has learned that Nigeria is planning its first Euro bond issue since 2022, and it's hired investment banks including Citi, JP Morgan and Goldman Sachs to advise it. The size of the bond offer is yet to be determined, but we understand Africa's largest oil producer could raise as much as $1 billion in external borrowing this year to fund its spending needs. We'll bring you more next. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Lizzie Burden in Dubai. Now, the oil-rich Middle East is close to becoming the only region with $3 trillion wealth funds. Many, though, operate in secrecy, making it hard to know the exact size of their portfolios. For more on this and how they spend it, we have Bloomberg's Matthew Martin joining us from Riyadh. Matthew, I'm a Manchester girl, so this story is close to my heart. They're often spending the money on sports. Why is that the way to splash the cash?
Well, sports is increasingly becoming an investable asset class. You know, for a long time, a lot of the sports clubs and sports teams they were sort of money-losing vanity projects. Increasingly, it's become an investable asset class where you can make money. As you say, in Manchester, you know, Abu Dhabi has really shown that you can create a profitable long-term business there, and so this is attracting a lot of these other sovereign funds in. It also plays into a lot of the soft power projection that these funds are involved in. It's all about branding and spreading a message that these are they're slightly cuddly, friendly states that you don't have to worry about. Investing in sports teams, which people all around the world know and love, is another good way of doing that. Good way of building a platform for projecting that soft power all around the world. And that's really why we've seen somebody like the PIF out of Saudi Arabia put so much money and so much emphasis into sports, as it's as much about branding and reputation as it is about financial returns.
So it's a good idea in theory, but is it paying off in terms of on the pitch as well as financially and culturally?
Well, look, it's obviously, you know, a lot of these things depend on the time frame that you look over. Abu Dhabi, as you're saying, has been able to make a very good case for what they've done in Manchester. Those investments have worked well. They've built up a wider strategy around football. We're seeing the PIF now follow some of that model with what they've done with Newcastle. Newcastle, they've managed to turn around the performance there. Now, also, one of the things that the Saudis are trying to do is sort of use this as a way and use all of the money that they spent buying international players and bringing them to Saudi. They're now trying to pursue a slightly different tack and now say, okay, now we want to bring foreign capital into our domestic sports industry, which is kind of a new feature of this that we've not really seen before. How successful that's going to be is going to be tough to sort of see over the next couple of years, because so far, as much as the Saudis have spent billions of dollars on sports, they haven't managed to transform this into big attendance and to big domestic profitable businesses in the same way that they've been able to do this internationally.
And so more broadly, what does it show about how important Gulf money is becoming for global markets?
Yeah, as you're saying at the beginning, you know, there's three sovereign wealth funds in the Middle East, which are now topping this $1 trillion, or getting close to topping the $1 trillion mark. It's indicative, I think, of how important these sovereign funds are becoming, how big a role they're playing in global markets. If you look across over the past couple of years, all of the big M&A deals, all of the big market gyrations that we see, the sovereign wealth funds are coming into them and looking to try and capitalize on them, whether it was, you know, the slump in markets that we saw as a result of the COVID pandemic. You know, the sovereign wealth funds swooped in then to say, you know, we think this is short term, this boom in private credit that we're seeing at the moment, boom in infrastructure investing that we're seeing. The sovereign wealth funds are all really hunting around for assets in that, and trying to do what they can to get as much exposure. And the other interesting thing I think that you see happening right now is that this growth in the sovereign wealth funds is coming at a time when the oil prices not necessarily been high enough to put all of the government budgets in the region in surplus, which means that the sovereign funds get boosted from transfers of excess cash. A lot of this increase in the size of these is coming because of returns, because these funds are maturing, because they've been able to grow their asset base based on the returns that they're making, because they're becoming better investors. The exception to that, of course, is the PIF, which is growing substantially because the state is still transferring huge assets to it, like this $160 billion stake in Aramco that we saw get transferred just last week.
Indeed, and we were just talking about Aramco's earnings at the start of the week, so bankrolling those expensive football players. All right, Matthew Martin, it's fantastic reporting. I do encourage you to read it. It's there on the terminal, all about those sovereign wealth funds. Now, we were speaking about the UK. We heard from the Chancellor of the Exchequer this week testifying in the Parliamentary Treasury Select Committee about his budget. Take a listen.
We want to abolish the double tax on work. And first of all, the amount of money raised by national insurance does not determine the amount of money going into the state pension or the NHS. It hasn't done for very many decades. And the evidence for that is the budget, because the budget, we announced a £6 billion increase in funding for the NHS. And we announced a £900 increase in the state pension, which is going up by 8.5%, which is around 3 times the rate of inflation.
So defending his budget there, he looked pretty happy. Maybe it's because the UK is no longer in negative growth, as we learned yesterday. So the Chancellor, Jeremy Hunt. We are looking at futures stateside, pointing to a higher opening after the lower close yesterday. We're going to be joined by Jennifer Zabasajja from Johannesburg for the next hour of Bloomberg Daybreak Middle East and Africa. So do stay with us for that. This is Bloomberg.
This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Caution in the market as investors eye next week's BOJ and Fed meetings. U.S. factory price data also in focus later today. We are going to bring you our top analysis.
US Secretary of State Antony Blinken calls on Israel to dramatically increase food aid getting into Gaza. This as the Knesset passes a war budget, taking Israeli spending to an all-time high.
Plus, the clock ticks for TikTok. The fate of the video app is now in the hands of the U.S. Senate after the House votes to force ByteDance to sell it or face a ban. It is just past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasajja.
And I'm Lizzie Burden in Dubai. Good morning. Welcome to Thursday. And you've got markets trading sideways this morning. As we look ahead to the US PPI and retail sales data later, all the attention really is on the Fed and BOJ decisions. So if you take a look, the MSCI Asia Pacific Index is flat to the upside. Euro Stoxx 50 futures flat to the downside. And US futures pointing to a higher opening after a lower close yesterday. If we flip over to the cross-asset picture, Treasury yields steady after a sell-off yesterday. Do keep an eye on them, though, in case we get a PPI surprise to the upside. You could drift higher. The dollar is flat. Of course, the BOJ will take centre stage for FX markets. The Brent is trading at $84 a barrel on the back of that Russian refinery attack and the US inventory drawdown. And copper at an 11-month high on reports that Chinese smelters are weighing capacity cuts. Jen, what are you watching?
Yeah, that's right, Lizzie. Look, I'm paying attention to what's happening in emerging market equities. If we take a look at the MSCI EM index, up just a touch this morning. But what we're seeing is actually some upside for the index, which is notable because what we saw on Wednesday, Wednesday was the first day in about 6 sessions that the MSCI index for EMs closed the day down. And what we saw was this coincided with Indian small caps tumbling by the most in 2 years. Some analysts, in particular from Glovista Investments suggesting potentially investors are pivoting from Indian assets to Chinese companies. Though, if we look at year to date, what we're seeing with the MSCI EM equity index, still seeing upside, but notable moves with that index right now. Let's check in, though, on how markets in Asia are faring. Avril Hong is in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, among EMs, Chinese stocks not doing that well either. I mean, you have those concerns about the property sector. But I think overall, if you look big picture in the Asia Pacific, it's about getting through the Fed and the BOJ next week. And ahead of that, you're seeing tech bearing the brunt of the selling, the Hang Seng Tech, which earlier in the week entered bull market, down today. That is capping what we're seeing on the Hang Seng and CSI 300. And if not for the gains in the copper mining related stocks, because Chinese smelters are mulling those production cuts, and that's driving up the commodity. So we're seeing those stocks running higher. If not for that, we're going to see, further bleed in the Chinese indices. You're seeing the property developers reversing some of the declines from earlier in the week. Hangzhou is relaxing some of those property curbs. But let's flip the board, because something to highlight as well is how the commodities play is playing out in stocks in Japan as well. As there's risk aversion ahead of the BOJ. We earlier saw the Nikkei sliding, but those energy-related counters along with the copper-related names are helping to lift the benchmark and the topics. But as I say, there's a lot of noise ahead of the BOJ next week, and we are in wait and watch mode. Today we're hearing about how the BOJ officials might be mulling a scrapping of ETF purchases, but investors more or less sitting on the sidelines before that central bank event next week. Guys.
Well, thank you, Avril Hong in Singapore, for that update. And we are going to continue the discussion of the central banks. Traders, of course, looking ahead to PPI, retail sales and initial jobless claims out of the US today as indicators of what the Fed might do. Let's bring in Bloomberg MLive's Mark Cranfield for more on this. Mark, which numbers should we be watching in particular?
Well, if anything is going to move the dial, it'll be the PPI numbers. I think that's about the only one the Fed would really be too concerned about. But obviously, we've had the CPI report out earlier in the week, which was a little bit hotter than expected. So the Fed have already got a lot to digest from that point of view. But they're going to put it all in with a number of other pieces of data for them to come to their conclusions, which is really, from a trader's point of view, what we really want to know is what are they going to do with those dot plots next week? Are they going to leave it at 3 rate cuts for this year, or are they going to tweak it to 2 or possibly even 1 rate cut for the year ahead? That's really what everything hinges on. And traders for now, they're thinking that there could be a repeat of what we saw in December, which is still looking for 3 rate. There's enough time for 3 rate cuts this year, but the time is running out, because the June would need to probably be the first time that they start to lower rates, and then subsequently from there. So certainly the chances are that they could shift to just 2, and that would be a negative for the Treasury market, probably give a boost to the US dollar, depending upon what happens with the Bank of Japan. Of course, we have 2 major central banks next week, and it's unusual where we have 2 of the biggest central banks and so many variables about what they might do.
Absolutely. It's going to be a very busy week. Bloomberg MLive's Mark Cranfield. Mark, thanks so much for joining us. Let's bring in our next guest, which is Mark Matthews. He is the head of Asia Research at Julius Baer, just to continue this conversation. So, Mark, let's just continue on and start off from where we were just at. 2 major central banks making decisions next week. A lot of variables, a lot of noise. Let's weed through the noise. I mean, what is it that you're focused on right now?
I'm focused on this market melt-up, which I think must be very annoying for Jerome Powell, because how's he going to cut interest rates when risk assets are on fire as much as they have been this year? So it wouldn't surprise me if they use that February CPI as an excuse to sound a little hawkish and try to take some of the froth out of the market.
Mark, do I detect you telling us this is a bubble, not a bull market?
It's not a bubble yet, I don't think, because, you know, these things, the big bull markets, like the one we're in now, and there's no doubt we're in a big bull market, but I just think that the top is always a blow-off that gets even more exaggerated than where we are now. And I don't think if you look at valuations, you can say that we're really in crazy territory either. So I just think that they need to take a little froth out of this thing. And once they've done that, and I do expect a pullback in the market very soon, we can go on to have a good continuation for the remainder of the year.
So, Mark, where do those cracks then start to emerge if we are due to see a pullback?
I think looked like there was the beginning of some rotation last Friday with the big sell-off in Netflix, but obviously that didn't follow through. But intuitively, you would think that the cracks would be in the technology sector, which has, of course, been the thing that's taken the market up, and we'd get some redistribution into the other sectors. And I think, and I hope it will be that way. I don't think we're going to have a bear market anytime soon, but I think we might get a redistribution of some of the activity in the market away from technology, or at least not so concentrated in technology. And that would be a healthy development, by the way.
So where should we be focusing? Where are the opportunities, for example, in emerging markets?
Interesting question, because I noticed that you were talking about them earlier, and there is the beginning of a breakout in the emerging market indices. It's just happening now. Of course, they've been totally ignored by global investors for the last few years because they're down about 30% from 2021. And of course, the U.S. has done the exact opposite over that period of time. I think China is very interesting. I think it's going to be a lot higher 12 months from now. I'm not talking about a long-term investment, but I do think that between now and 12 months, you're going to see Chinese stocks moving. And the main reason is that the government has clearly expressed its dissatisfaction with the continued fall in the market. And of course, as soon as they said that, it stopped falling back in late January. But when I look at Chinese stocks, they're abnormally cheap. I could cite so many examples to you of that. And it's a momentum market, so we're already up about 15% from the bottom in the Hang Seng. And the mainland Chinese indices are breaking out as well. The MSCI China Index is breaking out. As that continues, I think you'll see momentum investors come into the market. They're not fundamental investors, but I would say, just in conclusion on China, there is a fundamental case for a lot of stocks there. I mean, I can give you the names of a lot of stocks where they've got very good cash flow and strong balance sheets. And I think, it's a big market. There are good things to own there.
Mark, what does that mean then if we talk about FX in terms of the yuan and the yen? Because there's been a bit of a push and pull, and the question is what this cross really looks like going forward, especially if we see what many are anticipating from the BOJ next week.
Well, we'll see what the BOJ does, but we think they're not going to raise rates. They'll officially end yield curve control, which, by the way, ended a few months anyway when they widened the band of the yield curve control. But we're looking for a first rate hike from them not until well after the summer. I know the consensus is thinking it'll happen in April, but the terminal rate we're looking for for the BOJ is only 0.2% 12 months from now, up from minus 0.1 today. So not a huge move. And I think if you couple that with the fact that the U.S. economy is more robust than people had expected it to be by this time at the beginning of this year. They weren't looking for it to still be so strong. We're not going to get as many rate cuts as anticipated in the U.S. So I'm not looking for very big currency appreciation in the yen, and for that matter, neither the yuan.
If I can pull you up, Mark, on that China optimism you voiced earlier, does that mean that you think the property woes in China have bottomed?
No, they haven't bottomed. It's a intransparent market. The official prices are down around 17%, but unofficially what one hears is that you have to discount very heavily if you want to sell an apartment there. So I think probably prices are down about 30%. And of course, the hit on on sentiment is big, because most people's asset is the home they live in, and a bunch of people own several other apartments on top of that. No, I don't think that the property sector there is improving. I'm guessing what they'll have to do in the end is the government will just have to buy up all of the legacy infrastructure from the companies that have gone bankrupt and make it into state, public housing that they'll rent out to poorer people. I suppose that's the trajectory. What I want to say with China is, regardless of the state of the economy, I just think the market's going to go up.
All right, but we did see the China wanker slide, and that kind of underscores those property woes. We're going to keep discussing that story in the subject of iron ore and the commodities impact later in the programme. But Mark Matthews, really great to have you on, Head of Asia Research at Julius Baer. Thank you for your contribution. Still ahead, we're going to tell you why Commonwealth Bank of Australia says they think China's steel demand may track sideways this year. Stay with us for that. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Lizzie Burden in Dubai. Now, the US Secretary of State Antony Blinken has called on Israel to dramatically increase the amount of food aid getting into Gaza. America's top diplomat says supplies allowed in since the outbreak of the Israel-Hamas war remain insufficient.
The bottom line is we need to see, as we've described it, we need to see flooding the zone when it comes to humanitarian assistance for Gaza.
Let's bring in Bloomberg's Stuart Livingston-Wallace. So we heard Blinken there saying that they should flood the aid in. We already know about the logistical difficulties of doing that. When will the aid arrive, and what are the implications for US military in the region?
Yeah, so I mean, it's going to be something in the order of 2 months before they get the whole thing done in terms of being able to operate at full capacity. But even at full capacity, they're talking about 2 million meals a day. So that's somewhere between half and 1/3 of what you actually need to get into the region. Now, that's an awful lot better than the situation now, but it's still...
Hundreds of thousands of people starving.
Exactly. So there are real shortages there. Now, in terms of the US military, I think that has really important implications in terms of the commitment they're making here. It is something of a U-turn that they've been forced to make in the last several months. So you've seen the ships come in, which they were not anticipating. If anything, they were pulling them out for several years. And now you're going to have military personnel of one sort or another coming in. Now, the slight caveat to that is that it's all going to be at sea, and that's going to be an awful lot easier for them to withdraw at speed than if they were land-based. So there is that going for it. But again, it's a reversal of what we've seen over the last several years.
And Stuart, on Wednesday, we got this news about how BP and ADNOC suspended a mega deal. I mean, how surprising was this, considering the developments that we're seeing in the Middle East right now?
I think not surprising that it happened, maybe surprise in some respects that it took that long. I mean, obviously we'd been hearing rumblings about this for some time, and it's to some extent the logical thing to do. In this environment, I think it would have been very, very difficult to come up with some sort of mega deal or finalise a mega deal with what's going on in Gaza. So, yes, the UAE has signed the Abraham Accords. It does have diplomatic relations with Israel, and therefore the environment is there for them to do this kind of deal. But again, what are the optics of doing this sort of deal with the blow-ups that we have going on in that part of the region right now?
And the war's also weighing on Israel's deficit. Does that spell the end of Israel's astonishing economic growth?
Yeah, I mean, it's certainly going to put a pause on it. And it's just the sheer cost of paying for this offensive, week after week, month after month. It's a real drain. And it's not just the cost of the operations, it's also the number of people you're having to take out of the economy. And then just even at the most basic level, the disruption, you think, yes, the air raids, the missile alerts have calmed down somewhat in the last couple of months, but nonetheless, it is incredibly disruptive to day-to-day life within Israel, and therefore, by default, it is disruptive to industry.
Bloomberg's Stuart Livingston-Wallace. Stuart, always great to get you on. Thank you so much for that updated report. Let's turn now to Hanhai. Hanhai is on track to report its second straight quarter of strong profit growth. That's with demand for AI hardware helping offset weakness in iPhone and consumer electronics sales. Let's bring in Robert Lee from Bloomberg Intelligence, who is all over this story for us. So, Robert, what exactly are we anticipating from these results? Dig into this for us.
Okay, yeah, sort of zooming out slightly, looking at the 2023 results as a whole. It's actually been a year of weakness for them, but I think that's something the market understands and is well priced in, arguably. Reason for that weakness, just briefly, was because of the destocking we saw in mainstream sectors last year, including handsets or smartphones, and also the core server market. Looking into this year, though, things look a lot better, although there's an ongoing question mark with Apple that I'll come to in a second. But as you mentioned in your intro, AI servers should continue to be strong, and we're seeing restocking amongst these mainstream categories that was a problem area for them last year. So on the face of it, it looks to be a much better year. But again, we've got this question mark and uncertainty overhanging Apple or their Apple business.
OK, so an important barometer for Apple, but also China tech. Is there also read across from ByteDance's US TikTok woes to the China tech sector?
Okay, ByteDance, when people talk about the big China internet companies, they usually refer to Tencent and Alibaba, which are the two large listed companies. ByteDance doesn't always catch the headlines because it's a private unlisted company. However, it's of a similar size to the other two. The relevance to the China sector is that obviously the US business, their TikTok business, is a major driver of revenue and cash flow for them. So with this uncertainty on that side of the business, there are sort of two ways this could play out. I mean, if they're going to lose access to the US market and it has a negative impact on their finances, does that make them a less potent force in the China market? Or conversely, because they would be potentially cut off from overseas markets and the US being the biggest of those, could they actually up the ante and become a more competitive, actually try to be more competitive? So it could go either way, and it's too early to draw a hard and fast conclusion on there. But I think, the Alibabas and Tencents of this world are not directly exposed to that. It's purely a problem for ByteDance at the moment, and a very, political hot potato, to say the least.
Robert Lee from Bloomberg Intelligence, we thank you for that. And we're going to dig deeper into the strategic options available to TikTok later in the programme. We've got plenty more ahead. This is Bloomberg.
I think the experience from last decades shows how governance is a key issue when it comes to economic growth and prospects of economic prosperity. So I think governance issues will be very high up on the agenda everywhere, because the connection between good governance and economic growth is very clear. And if you have situations like we have seen in the Sahel region for a number of countries, for instance, that can be devastating for economic development and for investments.
What does that mean then for the investment strategy, at least in the short term?
So for us, it is very important to focus on viable long-term investments that have a chance to give a boost to economic growth. So when it comes to the political guidance, we follow the European Commission, of course. But when it comes to the actual projects, we use our expertise that we have in Luxembourg to assess each and every project. So renewable energy is for us key, energy transmission. In Rwanda, we are working a lot on health issues. We have a biomedical center that we are financing now that will be part of the ecosystem of health and life science in Rwanda. We do infrastructure, part of the global gateway strategy of the European Union. And I think it is very important for us to stay being very active on the continent and have a true partnership with the countries that we cooperate with.
Does the current macro environment right now lend itself to increased funding across the continent from the EIB, or is this sort of the announcements that we'll get as far as the continent goes with the EIB?
It's a truly challenging situation macroeconomically, and has been globally, of course, but I think Africa has been specifically hit by a couple of the shocks that we have experienced in recent years. First, of course, COVID meant a large drop in GDP for many African countries. Then came the brutal Russian invasion of Ukraine that caused both inflationary and shocks to the agricultural sector. So this has been a very challenging situation, and many African countries went into these two shocks with relatively elevated debt levels. So I think multilateral development banks has a specific responsibility here to look for viable projects that can still be financed, because many of the countries on the continent has challenges on the capital markets to finance themselves on reasonable terms.
EIB VP Thomas Ostra speaking with me about climate-related investments in Africa. All right, we have plenty more still ahead. Stick with us. This is Bloomberg. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Caution in the markets as investors eye next week's BOJ and Fed meetings. U.S. factory price data also in focus later today. We'll bring you top analysis.
US Secretary of State Antony Blinken calls on Israel to dramatically increase food aid getting into Gaza. This as the Knesset passes a war budget taking Israeli spending to an all-time high.
Plus, the clock ticks for TikTok. The fate of the video app is now in the hands of the U.S. Senate after the House votes to force ByteDance to sell it or face a ban. It is just past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja.
And I'm Lizzie Burden in Dubai. Good morning. Welcome to Thursday. If you're just joining us, you've got traders struggling to find direction in the Asia session as we await those US PPI and retail sales prints later today. But the focus really on the Fed and BOJ meetings next week. So you've got MSCI Pacific Index flat to the upside, Euro Stock 50 futures flat to the downside, and US futures pointing to a higher opening after a lower close yesterday. If we flip over to the cross-asset picture, Treasury yields pretty steady after a sell-off yesterday. 4.19% is where we are on the 10-year yield. This after the sell-off, but we may see more of Treasuries drifting higher if PPI surprises to the upside later. PPI, of course, important because it informs the Fed's preferred inflation gauge, PCE, as Mark Cranfield was reminding us. You've got the dollar flat, Brent trading at $84 a barrel on the back of that Russian refinery attack. And finally, copper has been at an 11-month high on reports that Chinese smelters are weighing capacity cuts. $8,864 a tonne is where we trade. Jen.
Yeah, that's right, Lizzie. Look, I'm paying attention to what is happening with emerging market equities. We're seeing them just a touch up this morning, but it's notable because what we saw on Wednesday was a bit of downside, and we saw the MSCI index for EMs closing the day down for the first time in 6 sessions, that coinciding at the same time as Indian small caps tumbling by the most in 2 years. What we're hearing from some analysts, including the chief investment officer of Glovista Investments, he's suggesting potentially investors are pivoting from Indian assets to Chinese companies. We'll have to see whether or not that actually plays out. But right now, the MSCI index for EM equities slightly up. We'll see what the rest of the day looks like. But for now, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, ahead of the Fed and the BOJ next week, there's really not a lot of appetite for risk. Investors are saying, why not take money off the table before we get more clarity? And the tech sector is bearing the brunt of the selling, the biggest decliner on the MSCI Asia Pacific. There's also earnings risk as we wait for Hon Hai's numbers. Of course, this is the Apple makers, well, the iPhone supplier for Apple. Let's also take a look at what we're seeing in the energy space, because that's ticking higher, the biggest gainer on the MSCI Asia Pacific as oil prices climb. Flip the board, let's take a look at the iron ore contracts in Singapore. That's approaching the $100 a ton mark. It has really been declining this week. It is the demand story as we hear these troubles in the Chinese property sector and then an NPC that wrapped up without signs of further stimulus stimulus for infrastructure. So that is what is putting pressure on what we see in commodities today. It's that China story as well playing through. Lizzie.
Avril Hong in Singapore, thank you. And we're going to stick with iron ore with our next guest. He says that the main trigger appears to be deeper losses for China's steel mills. He highlights margins have been negative in the country's mills since last September. So Vivek Garg, Commonwealth Bank of Australia mining and energy economist, welcome to the programme. How low can iron ore prices dip sustainably?
So look, in our view, we are in a stable region, so $100 to $110 a ton. And really what's driving that view is that we don't think we need iron ore to exit the seaborne market. And if it dips under $100 a ton, that's really the risk you run, because that's where a lot of cost support currently sits, between $80 to $100 a ton. And once that starts leaving the market, I think we'll start seeing price support come back in. So I think the stable zone is exactly where we're at, between 100 to 110, but it's a remarkable fall for a commodity that started the year at 140 plus.
Vivek, is it solely due to what we're seeing in China, as Avril was just noting there, or are there other factors that we should be thinking about here?
Look, with China accounting for about 70 to 75% of the world's iron ore imports, it is very much on the demand side a China story. And what we've seen is often this view and speculation that China was going to come in with a bazooka-style stimulus. And we think that really played a role in elevated prices earlier this year. But I think once the China's National People's Congress last week, it became very clear that there wasn't going to be something along those lines, a very big stimulus package. And so then what comes into focus is we're going to see ongoing property headwinds, and we're probably going to have infrastructure investment growth just offset that. So I think the market is getting their heads around that the China steel demand story is probably going to be a flat one. And so any hopes of kind of that infrastructure stimulus that we saw, say, post-pandemic, that had enormous returns very quickly for iron ore, and we saw iron ore reach that record high of $233 a ton in May 2021. So I think that's what people were really contending with. But right now, it's very clear that the demand hopes for China have really faded, and steel margins are really reflecting that story.
So what indicators are you watching when you're trying to take the pulse of the Chinese property sector with an eye on iron ore?
So look, the main one we watch is actually new construction starts, and that's by square meters. That's the most steel-intensive component of the property construction process. And that has been hemorrhaging. Like if you look at the last 2 years, 2022, it collapsed 39% year on year. Last year, it fell again 21% year on year. And just given the headaches that property developers in China have, we don't hold out much hope that we'll see that recover either. So, milder than last year, but ongoing pressure. And that's the key one we watch, because it's when you start the construction process that the steel and cement are put in. So if you really want to get a pulse, that's the monthly data set that we look at.
Vivek, let's pivot to what we're seeing with crude, because we've been talking about this for quite a few weeks and months now. We've seen this narrow trading range for crude, and there's a lot of factors that are at play here, but we still haven't seen crude break through what this range it has been at. Do you see that potentially changing in the near term?
Look, in terms of our views on oil, we're of the view that right now, we're probably going to move into a more surplus position. And that's really driven by demand slowing quite significantly from last year. So half the pace of growth. So say we're now talking 1.4% growth, or 1.4 million barrels a day. What the reality is in terms of supply growth is that non-OPEC supply is more than enough, non-OPEC plus supply, I should say, is more than enough to meet that demand growth part. And because of that, that's really what's creating the surplus expectation, which we think will project through coming quarters. The real question marks, if you had to put it down to, is one, what does OPEC plus do? I think they're going to be forced into a position of extending their voluntary cuts, and that's going to tighten the market. But what I'm quite concerned about is those demand forecasts that we've already talked about, 1.4% globally this year. I think that's at risk of downgrade, because inherent in that is that we'll see China's growth be at around 4% this year. If we look at some of the reports from state-owned companies in China, Sorry, that's
Sorry
closer
to cut
1%.
in. I just really want to ask you about the... Vivek, let me just quickly, before we have to go, ask you about copper, because we've seen these reports of copper spiking to an 11-month high because of the Chinese smelters reporting that they're mulling output cuts. I just want to ask you whether you're also concerned about the demand side as well as the supply side.
Look, on copper, clearly the supply side has come into action. Like we've seen supply disruptions come out of Panama, and that's really what's driving this shortage concern now. But in terms of the overall outlook, supply disruption is part of the game for copper. And I think, yes, for now, the market's paying attention to it, but inevitably it turns to the demand story. And keep in mind that 25% of China's copper consumption in China is linked to property. So I think that'll take fold once again. But in terms of supply, certainly copper has been hit hardest this year when we talk about supply disruption. So it's certainly one watching, and it could keep it elevated above $8,500 a ton. But the demand story in China, we think, may pull it down below $8,500 by the end of this year.
It's a fascinating story. Really appreciate your insights this morning. Vivek Dar, mining and energy economist at Commonwealth Bank of Australia, joining us this morning on all things commodities. Thanks, Vivek, for that. Let's pivot then to TikTok. The U.S. House of Representatives has passed a bill to ban TikTok unless its Chinese owner sells the video sharing app. Its critics have accused the platform of being a national security threat.
That's the responsibility of Congress. That's our responsibility to guard against these kind of national security issues. That's why we acted on this. We're not talking about banning TikTok. This is up to TikTok. This is up to ByteDance. They make the decision on whether they want it to go away or whether they want to divest themselves of the ownership of this.
Well, the TikTok CEO reacted to what he called the disappointing US House vote. Naturally, he posted a video.
Hi everyone, it's Show here. Just wanted to share some thoughts with our US users about the disappointing vote in the House of Representatives. There has been a lot of misinformation, and I hope to clarify some things. First, thank you to our incredible community. You are what makes TikTok so special. Thank you for making your voices heard. Over the last few years, we have invested to keep your data safe and our platform free from outside manipulation. We have committed that we will continue to do so.
For more, let's bring in our Asia government and economy correspondent, Rebecca Chung-Wilkins. Rebecca, what are the strategic options available to TikTok at this point?
Yeah, absolutely. Well, TikTok is said to be considering some of those options, and it's going to plan a legal fight, depending, of course, on the actual outcome and how this legislation moves through the Senate. It's, of course, not certain that it's certainly going to go through. But divesting and a sale of TikTok that separates it from its Chinese owner, ByteDance, is really the last resort for TikTok itself. And we know that Shou Chu, among others, have been lobbying hard Tuesday to try and avoid getting to where we are today.
And Rebecca, let's just talk about different scenarios because we were talking earlier with Robert Lee, and he was saying potentially this could be beneficial for the company if it bolsters their users outside of the U.S. How are you reading into this?
Well, I think there are a couple of different elements to it. Of course, it's an incredibly valuable company, somewhere between 40 and 50 billion valuation, I believe, at the last count. And TikTok itself in March and historically has said to be discussing these potential options. But there is also, of course, the geoeconomics element here, particularly when it comes to Beijing and Beijing's perspective. Now, we've had the Ministry of Foreign Affairs spokesperson coming out firmly saying that the US is bullying here and that this is going only to sort of end badly for America. It's going to backfire on America itself, accusing it of unfair practices. So Beijing has taken a very, very clear stance on, its own political view that the company and should not be subject to this type of legislation from the US. And that also kind of somewhat hampers or somewhat alters the context in which TikTok is operating. But it is also worth flagging that TikTok, unlike some of the other sort of geo-economic flashpoints that we've seen between the US and China, let's look at autos, for example, or chip makers, TikTok is different. As sort of Lizzie alluded to at the beginning, it is a video platform, that there is a great deal of relatability. The US audience understands, and the US public really understands and is familiar with this product in a very different way than we've seen for some of the other sort of sectors that have been hit by some of these tensions.
We're really going to have to join it one of these days. Asia government and economy correspondent Rebecca Chung-Wilkins, thanks for that analysis of the latest on TikTok. We'll have plenty more ahead. Stay with us. This is Bloomberg.
Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The South African government has terminated a deal to sell a controlling stake in its flagship airline, SAA, after 3 years of negotiations with Takatso Group. So joining us now to talk more about this is Bloomberg's Ntando Tukwana, joining me here on set. So Ntando, we've been talking about this for quite some time. I mean, what actually led to the breakdown of this deal? What happened here?
It's been a very long and complicated process leading to the final breakdown of these talks. But it's basically just the fact that the Department of Public Enterprises and the consortium Takatso, which was going to inject $3 billion for a 51% exchange stake, they just did not agree on the value of the airline. So when they first conducted the first valuation, it was valued at 2.1 billion rand. That was in 2020 when the global aviation industry took a knock from the COVID-19 related restrictions. And the second valuation saw the value of SAA shoot up to over 5 billion rand. And the minister just felt that if they went ahead at that price, at the 3 billion rand tag, that Takatso would be underpaying for the airline because the market conditions had improved since the first valuation.
So then what's next for South African Airways?
So now it will return to being 100% owned by the state again. It's now got to go back and devise a corporate plan, effectively a turnaround plan. And they did say that they will need to add more routes and lease more aircraft, and that they will need an aviation consultant to help them on that journey. They would also need to bolster up the board of SAA in the process. But what they actually need, which is the big part, is the cash to get it to a more stabilized position. And it's going to be very interesting to see how that is going to play out because the government has taken a very hard stance against funding public enterprises, and they have hinted that they will be approaching financial institutions to help them on that front.
We'll see how that plays out with SAA. Bloomberg's Ntando Tukwana joining us here in studio. Ntando, thanks so much for your time. All right, plenty more still ahead. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The oil-rich Middle East is close to becoming the only region with $3 trillion wealth funds. Many, though, operate in secrecy, making it hard to know the exact size of their portfolios. For more on this, let's bring in Bloomberg's Matthew Martin, joining us now from Riyadh. So, Matthew, what exactly is this showing us about how important Gulf money is really becoming for global markets?
Yeah, as you say, there's so much cash starting to accumulate in these sovereign wealth funds. And you mentioned there that the three big funds in the region are getting close to having $1 trillion each. That possibly undersells the picture, because if you look in somewhere like Abu Dhabi, but also in Saudi Arabia as well, there's other funds in different parts of the country with slightly different mandates, which bring this total number of assets under management of these sovereign funds to a much higher number. And, we're seeing that these funds are becoming incredibly important actors in global markets, particularly over the past couple of years. They're backing all of the big private equity deals. They're coming in and looking to fund all these big takeovers that are taking place around the world. They're plowing money into private credit. They're plowing money into infrastructure all around the world. They're plowing money into sport. And this is really sort of reinforcing this point that these funds are becoming investors which are just impossible to ignore. And increasingly, the role that these funds play in mix between the financial returns that they're looking to get, but also the soft power role that they're looking to play for the states that they're coming from, is becoming increasingly into focus.
And they've also been ploughing money into sports, a sore subject for this Mancunian girl. Is it working?
Well, look, I mean, it's working to some degree. I mean, sports has only recently become the sort of investable asset class that private equity firms and sovereign wealth funds can get exposure to, and so we're seeing that they're increasingly looking at this both from the lens of the financial returns and also this soft power play that these funds are looking to make. I mean, if you look at the progress that Abu Dhabi has made in Manchester, then that's had a big role as well in Abu Dhabi and in promoting Abu Dhabi as a partner for the UK, as a place that people would want to holiday to, as a safe destination. This all sort of plays into this investment case. And now we're seeing the PIF from Saudi Arabia trying to pursue a very similar strategy as well. They're putting money into UK football. They've invested in bringing a lot of high-profile footballers from around the world into the country, and that's all part of both, as I say, looking for financial returns because sport is such an in-demand asset class right now, but also looking at trying to change the country's reputation and trying to bring in tourists and trying to promote this sort of soft power role that the Saudis want sport to play. And they're also looking at using it as a way as well of promoting a healthier lifestyle among their populations. Whether they can pull off all of these things all at the same time is obviously going to be tough to do every single one of them. But I think, for the next few years, we're going to continue to see sports in particular be a big area of focus.
OK, Bloomberg's Matthew Martin, we thank you for that report. And it is really a fabulous one on the terminal about how those wealth funds are splashing their cash. But now we are 5 minutes away from that Saudi inflation data. We're going to go to a man who's all across it, who's also been looking at Egypt. The European Union is working on an aid package for Egypt that would provide over $8 billion in a mix of grants and loans. And it comes as the country continues to cope with the fallout from the Israel-Hamas war. So let's bring in Ziad Daoud, our chief emerging markets economist for Bloomberg Economics. Just quickly, Ziad, how much is the total aid to Egypt adding up to? And is it going to be enough to solve the country's problems?
It's significant. So in recent weeks, we've had the deal with the IMF, the UAE, now the European Union, probably the World Bank as well. That adds up to about $55 billion of aid to Egypt. The most important of which is, of course, the UAE, both in terms of size, it's $35 billion, and in terms of the delivery of that support, which is over 2 months. Is it enough to help Egypt? I think yes. In the short term, it's enough to address Egypt's acute dollar shortages. In the long term, maybe. We'll see.
All right, Ziad Daoud, thank you for that. And we do keep an eye on that Saudi inflation print in less than 5 minutes' time. Our chief emerging markets economist for Bloomberg Economics, we thank you. We are looking at futures stateside, pointing to a higher opening now. In Europe, to a lower opening, flat to the downside. And stay with us, because Tom Mackenzie will bring you Daybreak Europe next on Bloomberg TV. He'll take you through all of the data and the rest of the day. This is Bloomberg.